mistakes when investing in the stock market can become very costly very quickly. So unless you learn exactly how to avoid them, you won't be able to enjoy your portfolio returns. So welcome to Wealth the Cat. My name is Swasti, and today I will go through the top 5 mistakes to avoid when it comes to investing in the stock market. So let's get straight into the video. Number 1 is trying to time the market. Okay, being able to time the market is one of the greatest myths of all time. Okay, there's no consistent strategy out there that's able to tell when a market's gonna go up or down. Alright, actually short-term fluctuations in the stock market is inevitable. Okay, if you are trying to get a strategy out there, or if someone's trying to sell you a strategy out there that's able to time the market, it's probably a scam. Okay, you'll be better off just trying to hold your stocks for long term instead of trying to time the market, because it's not possible. Okay, so this is one of the mistakes you should definitely avoid when it comes to investing in the stock market. So the second mistake to avoid when it comes to investing in a stock market is falling in love with the company. Okay, so this is one of the easiest traps to fall into. Obviously, if you love the company that you invest in, that's great. But investing in a company just because you love it is not so great. So let me give you an example. I have a friend that just bought a company just because he loves the company so much. Okay, but the company had really high debt, and its valuations and its strategy for growth were not very strong. Okay, so when I told him this, he refused to accept the facts and he continued to invest in a company. Okay, so this is something that we definitely want to avoid. We don't want to fall in love with a company where we refuse to see, what's out there in front of us, which is its valuations, its strategy for growth, its financials. So let's move on to point number 3, which is panicking when the market goes down. So people commonly tend to panic and sell away their shares, which has really great potential when the market crashes, or let's say the economy enters a recession. So one of the greatest sayings that I go by, which is something that Warren Buffett said, is that be fearful when others are greedy and greedy when others are fearful. So people tend to get really fearful when the stock market crashes, and that's the time where you should get greedy and start to buy more stocks. And this is how Warren Buffett manages to buy stocks at a really low price. So remember, do not panic when the market goes down. So number 4 is believing that it will be different this time. Okay, trust me, history will repeat itself. So stop trying to lie to yourself that it's going to be different this time. So back in the 2000s, during the dot-com crash, people believed that it will be different this time. The market won't crash, and people started to buy stocks at a really high price. Okay, and in the end, the market crashed, they entered a recession, and people had to endure really great losses. And just like that, in 2007, investors again bought stocks at a really high price, believing that it will be different this time. Okay, trust me, it's not going to be different this time. Do believe the history and try to avoid falling into this mistake when it comes to investing in the stock market. So last but not least is ignoring financial valuations. So trust me, the numbers are not going to lie to you. Okay, a great company can be a really bad investment if it's bought at the wrong time. So a stock market return comes from 2 components. Okay, so the first component is your investment returns, which is your appreciation and growth of a stock or a company. Okay, the second is actually from speculative return. So what happens here is that speculators buy a stock hoping that someone else will pay a higher price for that stock at a later point in time. Okay, so this can even be considered gambling, because you're just buying a stock hoping that it will go up without any proper research or financial valuation to back you up. So it's really important that you understand the difference between gambling and investing if you want to maximize your returns and you want to avoid this mistake in the stock market. So to avoid ignoring a financial valuations, do your research, okay? Try to read a company's balance sheet, income statement, and cash flow statements, okay? On top of that, do not purely rely on just one valuation to determine if a stock is a good stock to invest in. Try to expand your horizon, try to look at all the different factors that comes into play when analyzing a stock. So with that, I hope that this video gives you an idea on the type of mistakes to avoid when it comes to investing in the stock market. If you like this video, do give it a thumbs up, leave a like down below, and subscribe to my channel for more related videos in the future.